For people who are just starting off and can't hire the branding right away, there's a lot to it, right? Because there's so many people out there and owners and operators, and you have to ask your question, what makes me unique and what makes me different? And I always use a litmus test that if you can do a find, replace, and put someone else's name in there, does that really make you unique then?
This is episode number 12 of the Multifamily Success Stories podcast. Would you like to turn vacant units into cash and earn up to 3 times more per door without having to do any extra work yourself? We offer fully managed short-term rental solutions for multifamily investors. Go to managedbylux.com for more information.
Hey, this is John Bell
And Julian Sage.
and welcome to the Multifamily Success Stories podcast. This is a show where we talk to multifamily investors about their journeys and starting and growing their real estate empires.
Our goal is that you'll be able to walk away not only inspired, but with practical information to help you in your real estate journey.
Since we are a new show, please go over to iTunes and leave us a review and let us know what you enjoy.
And if you haven't done so already, go on over to our Facebook group, the Multifamily Success Network, to connect with the community. Hey, what is going on, Dealmakers? Julian Sage here, and in this episode, I had the special honor of speaking with Puja Talati. Puja is a marketing and operations manager at JT Capital Group. Puja's team has a combined $500 million of assets under management and 3,000 doors. Puja is a former brand manager at the Hershey Company, where she managed and marketed iconic brands such as Hershey's Kisses chocolates. Puja was also a management consultant at Deloitte Consulting, where she worked in numerous industries and services, including post-merger strategic planning for Fortune 500 banks. In this episode, Puja shares her experience of falling into the multifamily sector with no prior real estate experience and how she leveraged her project management and marketing experience to help her skyrocket the company's growth. If you like my show notes for this episode, go to multifsuccess.com/EP12, or if you like my show notes sent directly to your inbox every week, then go to multifsuccess.com/show notes. With all that being said, on to this week's conversation. Hey, welcome back, Dealmakers, to another episode of Multifamily Success Stories. In this episode, I have the special honor of speaking with Puja Talati. And did I say that correct?
You did, yeah, that's
okay.
correct.
Puja, if you please wouldn't mind introducing yourself to the Dealmaker community and let them know who you are and what inspired you to get into multifamily investing.
Sure. Hi. So I'm Puja Talati. I live in Austin, Texas. So it's crazy hot right now. I have a background in strategy and operations and marketing. So I worked at Deloitte Consulting for about 4 years, went to business school, went back to Deloitte Consulting and realized, my heart was always in marketing. So I joined the Hershey Company. Worked there for about 5 years in brand management. So I worked on really, really big brands to startup launch brands. Really love that because it married my love for strategy and marketing. And so then in about 2016, I had my first kid and we also moved to Charlotte, North Carolina. And at that point, while I was looking for a job, my husband and I were always interested in real estate, but I thought, I can't take on another job and have 2 full-time jobs and a kid. It was too much. And so my brother actually had already been in the real estate business and he said, hey, look, we need someone to do marketing. You also want to do real estate. Why don't you come work with us? And, I thought, okay, well, let's see how this goes. And, I can always go back to corporate America if I don't like it. And, a couple years later, here I am. And I've just launched a new venture. So really excited about it. And, I'm always excited to see how the future path kind of twists and turns and where you end up being.
Wow. So it's because of your brother, you said, that you got into the real estate. Okay. So I definitely want to talk about that, but let's go back a little bit, to, building, your skill set and how that is best suited for what you're doing now. You said that you were working at Deloitte. What was kind of your mindset or your skill set that you were acquiring during that time?
Yeah. So, with a lot of management consulting companies, what they do, at least in the first year or two, is they really train you for a lot of different things, right? Being able to analyze data, being able to get a lot of data, and then being able to synthesize that data and then providing those recommendations to the C-suite. The other thing is storytelling, right? Being able to put together a pitch deck or a story that makes sense. Seeing, where are there operational efficiencies and how can you improve that? So it's really building on some of those like analytical, presentation and delivery, being able to influence. So you have a little bit of that marketing as well, and then being able to really pinpoint what are the problems or challenges that a company is dealing with, and then how do you solve that. So with strategy and operations, that was something that I had learned. And then obviously, as you move up in the company, your skill sets become a little bit deeper. And the cool thing is I worked in a variety of different industries and service areas. And so when you're there at a company for 2 weeks, you pretty much are the expert in what you're doing. So the learning curve is just, it's kind of like this. So you have to learn really quickly. And if you weren't an expert a week ago, you better be an expert, as you hit the ground running.
And so you were learning these, and these seem like pretty invaluable skill sets. And your next role, you said that you're actually working with Hershey for branding. Can you kind of talk about that experience and what that was like?
Yeah, so that was a really cool experience because the Hershey Company, you're not just a marketer when you're on that brand. You truly own that brand. So you look at it more of being like a general manager of a brand or a company, if you will. So just because I was focused on the marketing, you're actually owning your financials. If there was a hiccup in supply chain, I had to go figure out what was going on or speaking with supply chain. So you kind of you were like a jack of all trades and you wore many hats. And I think the learnings and experiences that I got from Deloitte and Hershey, I think really set me up for being able to work in real estate. So, it was a different industry, but there's a lot of skill sets that you can use from like an entrepreneurial side of things.
Can you kind of talk about, so you were at Deloitte, you moved to Hershey, and then you were looking for another opportunity, and your brother actually said, "Hey, I'm in real estate. Do you want to help me out and grow this together?" So what? It sounded like you were doing pretty well. You're with some really big name brands. You're developing like a really unique skill set. Why switch over to real estate, and how was that transition from these companies where you're doing more consulting and maybe skill sets that maybe don't directly correlate to what you're doing in real estate? So what was that like?
Yeah. So one of the reasons why I switched over, during that time in my life was, mainly just being able to have some of that work-life balance and being my own boss. I've always had this knack or entrepreneurial side of me, but I've always kind of followed that straight path of, okay, you graduate, now you go to your first job, now you go to grad school, now you do this. And so that was just really appealing to me. And I was at a place in my life where I could take that risk. My husband had just finished his fellowship, so now I didn't have to support the family in the way that I was before, so I could actually take that risk. So I thought that it was a really great opportunity to be able to say, okay, you know what, now I can be my own boss. I can set my own schedule, and I can try new things. And so I tried that out. And the thing that they needed is they didn't have the marketing skill set. So I was able to kind of bring that over, as well as a lot of the operational sides that I'm used to. And so one of the challenges I think that I had coming from a big corporation to going to a really small company is you don't have that budget, and you also don't have that infrastructure that you used to have. So things that I would generally have outsourced to an agency, I would have to do that myself. So, I quickly realized, okay, maybe we can't do everything that I normally would want to do. So you kind of have to pick and choose and flex different muscles. So that was actually also really exciting to me, is like, I thought, okay, now this is a challenge. And I'm always, I think this is the consulting mindset is, what's new to you, or what might be a development opportunity? And then how can you turn that into your strength? Right. So it's things that you might be uncomfortable with. How can you make yourself more comfortable? And so that's kind of the mindset that I've kind of been ingrained with ever since graduating from undergrad.
So when you join, like you were saying, you were with these companies and they kind of provided probably everything for you. They had the framework, they had the systems, they had the resources, the tools, um, the capital to be able to just really allow their people that were working with them to really grow. But then you said when you decided to move into real estate, was it kind of like a blank slate at that point? It's just like there was nothing there. So what was that transition like?
Yeah, so in some ways it's kind of cool, right? When you have a blank slate or you have this blank canvas, you can kind of mold it to where you want to be. Now the company already was there, so I didn't have a complete blank canvas, but I had something to work off of. There's pros and cons, right? When you're in a bigger company, you have a lot of processes in place, which can be really good, but can also be a little bit of a hindrance because it's really hard to change a process at a big company, or sometimes things just move a little bit slowly because now you have to go through all of these approval processes. So on the flip side, working at a small company, you can have the power to change things a little bit more quickly, not have so many levels in place to say, okay, no, it has to go this way, or have all these checks and balances. So that was kind of cool that I can actually leave my mark a little bit more, if you will, because I could basically say, hey, here's my recommendation. And coming from like the marketing expert, everyone's like, okay, that makes sense. Go ahead and run with it.
First, a company that is kind of like a startup, how many was there any properties that you currently had when you got started? Was there like an existing portfolio in place?
Yeah, there was already an existing portfolio. So I joined when they already had a couple of properties.
Okay. About how many properties was in the portfolio when you joined?
4 properties when I joined.
4 properties. Okay. And so was this, I mean, everybody's kind of thinking like, okay, I want to be able to, maybe change my job. I'm looking to get into real estate because of, some of the benefits, the flexibility, being able to do this at home, and it's kind of like that blank slate. When you joined, where was the company in a position where it's just like, hey, I can start, getting a nice salary or getting some nice passive income, or was it just like, no, you have to build it with the company?
So I built it with the company, and I went in knowing that, right? So that's where I was saying I was in a good place where I could take that risk and not have a salary right away. So it was okay. Now I know not everybody can do that. So the timing they may have to work 2 jobs until like one really picks off, and then you can say, okay, now I can quit my W-2 job, right? I just had that opportunity because I was also on maternity leave, and then I quit, and then I was looking to see what I wanted to do next. So I was in a very comfortable and a good position. So I do think that I was very lucky in that way. But yeah, so I kind of went in expecting not to make anything actually my first year. And that wasn't the case. So that was also very exciting. But it was a lot. I did put in a lot of time and work just to also prove to everybody that, even though I didn't start in real estate or I didn't have the experience as some of my other partners did, I did have the outside background and skill sets that definitely you can leverage. And as long as you can remember, okay, this is what I can offer, this is what I can bring to the table, and offer those perspectives that might have worked in other industries, I think that's really valuable for anybody when they're thinking about switching industries.
Well, so you had this really nice, you had this opportunity where you could, join a company and just contribute, put in your sweat equity into that. I'm sure that there's probably lots of people out there that are listening, like, where are the people like Puja? Like, I need people that are willing to, put in the time because they're not able to pay out, but they see the vision. How are you positioning yourself in this company? Like, you didn't have any experience with real estate, so coming from a marketing and brand background, how did that fit in? Like, hey, I have this. Like, where does a company say, like, I need someone that has marketing or brand experience to be a part of my core team when I'm starting, as opposed to maybe like operations, or as opposed to an underwriter, someone that is in the field. What was it about this company that was really looking for like brand and marketing at the beginning?
Yeah, so they already had someone from an investor relations standpoint. They already had someone that did the underwriting, right? So they had that piece covered, and they had the operations. But when I stepped in, they didn't have the marketing. There wasn't really a website or social media platforms, right? And in this day and age, you kind of have to have that as table stakes. So I really took that under my reign of saying, okay, let's create all of this stuff. I designed everything from corporate brochures, everything. It's all of those things that I think you want to have or you do, but then maybe you just don't have the time and the bandwidth. And then my background is also in strategy and operations, so I brought a lot of the operational aspects to the company. So like project management, right? Just people forget too that as you're acquiring properties, yes, you have to manage the properties and manage that, but you also still have to run the business. And you want to make sure that when you're running the business, that you're streamlining your operations, because as you continue to grow, you want to make sure that you've projected and planned appropriately. Otherwise, and this is like my quote is, you're not going to work smart, right? So I'm all about working smarter, not harder. So that's where I put in, okay, let's talk every year about our 1 year, 3 year, 5 year vision. And these are all things that we would do at Hershey, right? It's just part of, like I said, you're not just doing the marketing and the advertising, but you're looking at the financials, you're looking at your P&L, and you're projecting to say, okay, well, what are our goals for this year? Are we going to meet them? And then having those checks on a biannual basis. So I started to implement a lot of the operations to just make it. Now I know it would never, you wouldn't, it's not like a big corporation where all these operations are just running smoothly. You have to remember, and this is something that I learned, is what worked at a big company doesn't always work at a small company. So you kind of also have to be flexible. And so, I just worked with, okay, what makes sense for a smaller company that also needs to be agile and needs to also move quickly. So I also learned a thing or two as I joined, but implementing those operational processes, I think, was also a big value add from my previous experience.
Do you think, because there's maybe a lot of people that are listening and maybe they have that experience in marketing, maybe that's kind of what they're more called to as opposed to the operations. Do you think that that this is something that a lot of startup real estate companies need, is a person that has marketing and brand background, more of the artistic side, or is that something that really should or could be added on later on in the company, after you have some properties under your belt?
Yeah, so I think it just depends on what you're looking for in the company, and do you yourself have enough knowledge and wherewithal to do that. And what I mean by that is, can you take care of monitoring your Facebook page? Maybe you hire a little bit of the social media out, or maybe you just, one thing is, don't stretch yourself too thin, right? So I see a lot of people are all over the place and they're on all these social media platforms. And that's where I would say just pick one or two and do it really well. So then, yeah, you probably don't have to hire out, because now you're not stretched so thin. Because as you're starting off, you have to remember there's all these things that you need to do. So as long as you can maybe hire some of those things out, like hire it out to get the web development done, maybe that's not your area of expertise, that's completely fine. I would think about your strategy and your branding, and I don't know if people necessarily do that. And that's where, I obviously had a connection into real estate and getting into the company. So it's probably my experience and story, I think, is a little bit different from most people. But for people who are just starting off and can't hire the branding right away, there's a lot to it, right? Because there's so many people out there, and owners and operators, and you have to ask your question, what makes me unique and what makes me different? And I always use a litmus test that if you can do a find, replace, and put someone else's name in there, does that really make you unique then? And because there's a lot of people that will say the same thing. So then how, as an investor, am I going to differentiate between company A, company B, company C? And really thinking through that process. And part of the marketing and the strategy process that I'm used to is saying, okay, well, what are the needs of our investors? And do I have, what's my target market? You can't market everybody. You just won't get the right ROI. So thinking through all of those things is how like my brand hat comes on, and then saying, okay, what's my bullseye target, and making sure I reach those people. What are my goals for year one? Maybe my goal for year one is just increasing awareness. Okay, what are my target metrics for that, and how can I get there? And then in year two, what are my new marketing goals? So if you can think through those and you can do that stuff, you don't need to hire someone right away. But I think for me, my experience is a little bit different because it's not just with branding and marketing. It kind of adds in like the operations and the strategy, just from wearing different hats from my past experience.
Yeah, I was going to say, that just kind of, just kind of clicked that, for people that are trying to find these properties, it's like, okay, like, what are my KPIs, my key performance indicators for just trying to find that property? How many people do I have to talk to? How many and meetups do I have to go to? How many, emails do I have to send? Phone calls do I have to make? But from what you're saying is you're doing the same thing, except just on the marketing aspect, which is, how, what are the goal, what's my goal for, our company. And you also hit on some really interesting points, which was one was the clients that you're working with, your investor clients, what are their needs? Can you kind of talk a little bit about needs of investors? Because like you said, there's lots of companies out there, lots of syndications, lots of people that are offering real estate. Is not everybody just looking for the best possible return with the someone that they trust, or are you saying that there's other underlying needs when offering real estate?
Yeah, so I think when you look at your investor base or your investor profile, right? It's what does your company do, and what are they going to like? What needs are they going to fulfill for the investors? So I'll just give you some like dramatic differences, right? Are you targeting people who are younger, who might be able to take riskier investments, right? Or are you targeting a older profile that's on the verge of retirement that probably doesn't want to be as risky in that moment? Those are two very different investor profiles. And then depending on what your company does, you may be targeting one or the other. You want to also focus, are you targeting high net worth individuals? Are you targeting people just within, like I live in Texas, just within Texas, or are you going national? Are you targeting? So there's all these things to think about, right? Like, are you targeting, I come from a physician family. Are you targeting physicians? Because they get calls all the time, left and right. They want to know, who are they investing with? And so, if you don't pick some sort of target, what's going to happen is then your communication isn't going to resonate with one person or the other because you're trying to please every single person. So that's why I think it's really important to pick, like what we say, like your bullseye target, and then kind of that periphery around it that you'll reach. Yes, I think everybody wants the best returns possible. That's probably a given, but each person kind of approaches it from a different manner. Similar to, I think when you look at people, some people are really interested in buy and hold forever. Some people are interested in maybe a flip. Some people are interested in single family. Like even within commercial real estate, there's so many different options. So that's why it's really important to target people who, for us, are interested in multifamily. They're interested within like the 3 to 5 year holds. So that's why I say, when people ask like, why don't you do single family? I said, there's nothing wrong with that. That's just not what our company is doing. But if that's what you're interested in, then you should look for another operator that's what they focus on.
How is that messaging really possible though? If you're trying to build your brand, but you're only able to really maybe find deals within a certain maybe class. So like, your ideal investor client might be, high net worth, looking for something passive, older demographic, but maybe the only property that you are able to find or that, is kind of come across, or the property that you pick up, how does that work when the properties that you are acquiring maybe aren't in line with your investor clients?
So then what I would say is you need to pick one or the other, right? If what you're looking at isn't meeting what your investors are looking for, then they're not going to invest in that asset. So then you need to probably pick a new target. But I think if you can really figure out what you're going after, right? And you would say that on your website, like, this is what we focus on, and you have like a potential client intake form, right? To see, okay, does this match, their investment criteria? And you talk to them and you start to realize like, okay, this relationship is something that will work. Then that makes sense. You're going to find people that you talk to that you realize, and they also realize, okay, this isn't, and I've had that happen where it's not the right fit, but we still keep in touch because people's profiles, investment profiles change over time. Maybe they're single and then they get married, or maybe they're moving or they switch jobs. So I think it's always good to just keep those relationships. And I think if you really know what your investment is going to be from a property perspective, then you'll know how to start targeting. And if you're not reaching those right people, then I would revisit your marketing plan. Like you probably, and that's also true to like how you go about using these marketing vehicles, right? Like I think the website is great, but maybe the people that you're targeting is not on Facebook. Maybe it's Twitter, maybe it's LinkedIn, maybe it's Instagram, right? So there are different types of users for different types of platforms. And so if one isn't working, ask yourself why, and then see what you can do to switch it. Maybe the language you have on these communications aren't reaching the right audience. And I would just ask people that are close to you and get their opinions too, because sometimes you have blinders on and you think what you're conveying is what you're thinking in your head, but it comes out very differently to someone else.
Can you kind of walk us through like an example of that first deal? So you come in into this company and they pick up their first property. What was that experience like for you, and how are you tackling some of the challenges of that first property?
Yeah, so it was actually really exciting and also kind of stressful for me because this is the first time I was going through this from beginning to end. So it was really great to have partners that knew what they were doing. I asked a lot of questions. At that point, I probably was like, wow, I really don't see the work-life balance here right now. But, it was also really exciting because this was all very new to me and I was like learning as I was going, but I was able to use the marketing stuff immediately, right? Because we had to get all of our communications ready. I got to put my own kind of creative spin and design on that. And then I just, I'm a team player. So I just asked, hey, where can I help the team out? And so I did a lot of different things, which it was really nice because that was my way of also learning the full cycle of the project. I would say that's where I started to see some operational efficiencies. And so just created kind of like a lessons learned tracker to say, okay, guys, let's not make some of these same mistakes. And I wouldn't say mistakes, but just, things where you're just like, wow, we could have done that better. Or, we spent 5 hours on that and now we know what to do. So let's not spend 5 hours again. Let's get that done in 1 hour, and just making that list, because by the time your project ends, which usually takes a couple of months, right? You're probably going to forget because now you're busy with, after you close on the property and getting that part started, right? So just adding that in and those lessons learned, I think really helped. And each time we went through the cycle, I could see, at least for me, it got easier and easier and easier. And to me, that shows progress. And it shows that you're constantly learning.
Can you walk through some examples of those obstacles that you faced? Like what were they, and how did you identify them, and then how did you resolve them? Because I imagine that this is probably very similar to the strategies that you're implementing in like Deloitte or Hershey, where it's just like, okay, how can we maximize our time, try to get the most out of the people that are working with us by removing those roadblocks. Can you kind of explain what that was like within real estate?
Yeah. So one that I remember really well on the first one was not really giving people a time limit for when we needed to be funded. Right. And we didn't initiate that before because we said, okay, we know they're interested. We know they're going to fund. But, what you realize too is at some point you really want that certainty. And so we just had to keep following up with people. And obviously then the second time around, we implemented like a 3-day process. And what we noticed is people were okay with that. I think they just needed to read it and say, okay, this is what I'm committing to. And knowing that if they don't commit and they don't get everything done on time, then they potentially would lose their spot. And the nice part about that is kind of putting parameters in place, because if people don't have parameters, they have all the time in the world, or they're going, and this was during the summertime when you have holidays and people are going on vacation. And so it was really hard to get everybody to commit to a certain time. So that was something that we learned, we put in place for the next one, and it worked really well. And, some people need a little bit more time, and obviously we were totally fine with that, but it was just setting guidelines and expectations up front, I think really helped for a smoother process. So that was one that really stood out.
And how do you implement that? Is that like part of like your guys' operating agreement, or do you have like a separate contract or something that they have to sign? Like, how do you put that into place?
Yeah, so the way that we did that differently is just in our conversations earlier on, say this is the process. This is how a project would work, and then right before, when we're sending out our communications to our current investors to say, hey, there's a new deal. This is the timeline. These are the expectations. This is the process. That's all we really needed to do, and it was really cool to see that it worked really well. And so, yeah, it's just really about setting those expectations up front. And I think people want that, right? They want to know, what do I need to do? And seeing that in writing was really helpful. And then, we put together kind of like an FAQ or a process 101. Hey, you have questions on how this works? Here's everything from beginning to end. So it wasn't just that, but we kind of really explained everything so people were comfortable with it. And then they can ask us any questions of like, oh, okay, but what about this or what about that? And I think doing that really helped quite a bit.
So that was one challenge that you guys faced. What was kind of another thing that you saw as an inefficiency that maybe people didn't really realize is something that should be corrected?
You mean from like our side, the owner operator side, or?
Yeah. Or what was the, maybe like the, was that like really what you took away from that first deal was that?
Yeah, I would say that was probably my biggest takeaway from the first deal. And then for me, really, like, I'm always about operations, right? So actually another good takeaway too from that would be just delegating roles and responsibilities. So I'm very much of a visual person, right? And I like to cross things off. And like I said, project management, right? So for the next deals too, what we did is make sure that we had a list of all the things that needed to happen and by when. That was something that, it worked, but I think there's always room for improvement. And after every deal, or honestly, like after every project, you really should look and question yourself, like, where could we have done better? And that's one where I think just assigning people to certain roles and responsibilities, one, it adds accountability. Two, you have an idea of when things should be done, but who might be that person that you need that handoff from. And so I think just assigning it, and we kind of knew who was doing what, but I think just visually seeing it also helps put together your timeline and say, okay, well, I need that person's stuff by this date. And then you know who to go to, but you also know if they're delayed, you might have to push back your stuff as well. And so I think visually it was just really easy to kind of see that, and we can change that. And Airtable, I think, is a really great tool for that.
Right. I was just kind of remembering. I have my partner who's usually on the show with me, John. He's in the project management space, and he presented to me these charts and these graphs, and it's like, okay, there's all these different colors and all these different dates, and I'm just like, me not having any experience with that, I'm just like, holy cannoli, like what this looks like a project just trying to figure this thing out. So how can people that are trying to implement some more time-bound project management systems in place, how can they more easily digest something like that?
That is a great question, because one thing that happened too on our team is you want to be careful of adding too many things, because then people don't know where to look. And now you have 5 different tools, and then that can be overwhelming. So now you're kind of like, okay, now I need to learn this tool, and that's going to take me a couple of hours. And I don't have 2 hours to figure out another tool. So one thing that I think is really important is when you're sharing something, before you put everything together, talk to your team and get their buy-in. Because if you don't have their buy-in, you're just going to waste time. So for us, for example, I didn't even bother doing MS Project, because I find it a little bit more complicated. And I was like, you know what, let's just do Excel from the beginning. So we started off with Excel, and then, someone had recommended Airtable. So I said, okay, hey guys, in one of our weekly meetings, hey, look, this is a cool function. Here's how it is. It's very intuitive. And so everybody was on board. We had tried Trello, but what we realized is only half the team used it. And so I think buy-in is absolutely important, because otherwise you just don't want too many tools. So with JT Capital, we one of the partners, Rohan, he has a tech background, so he has all these cool tools and things like that. And one that he introduced to us that we all really like is Notion, because Notion, it's kind of like the one-stop shop, if you will. We have all of our action items on there. You have a lot of your documents on there, so it's kind of like all in one place. So we easily bought into that, because now we don't have to have 5 or 6 or 7 different tools that I'm going back and forth with.
Gosh, when you said Notion, when you started talking about like Trello and Airtable, like, okay, coming from like, myself with the media and IT background, it's just like, okay, like I know funnels, sales, process, but Notion, it's still one of those where it's just like, oh my gosh, that seems a little bit much. How are you guys utilizing, if you can kind of explain what is Notion and how you're implementing it in real estate? Because this is actually the first time that I've heard of real estate utilizing with Notion and how that kind of works.
Yeah, I mean, it's a great project management for us, right? Because we have, like, for example, all of our meeting minutes are on Notion. So if let's say 2 of my partners have a meeting with somebody else, well, I can just go into this and I can just do a quick search with just, maybe the people in the meeting, and I can see and read all of the meeting minutes, which is really nice. You can put tables in there, so you can do like expense tracking or whatever you want. You can share certain things with certain people outside of the group. We have all of our like company visions, goals, strategies, all of that on there. And I have a Mac, so I have the app downloaded, and then I could just see some of the updates that come right before our weekly meetings. I could just quickly look to see what are my action items, what's the date, when is it due. So it's a really dynamic tool. And what's nice is that everybody can see this real time. You can even put it on your phone. And given that we're also traveling or we're always out and about, you don't have to be in front of your computer. So what I like is I can also access a lot of this stuff from my phone. And then, we use Google Drive, so then I could link everything to that. So everything is just very accessible. And it seems like it's all in one place.
So what is the big benefit add to, like, let's say Notion versus, maybe people are just going out there and they're just like, hey, I'm going to use Gmail and Google Drive to, just keep everything organized or semi-organized. How does utilizing Notion really take organizational and process to another level?
So I think it's just it's very dynamic in that way, that like you can also categorize everything into folders. When I look at Google Drive, it's great that I can share all the worksheets and things like that. But I think and to be quite honest, we're using it probably at a very high level, but I started to see all the things that you can do with it. So most of our stuff is just housed in there and it's categorized. And to be honest, it just looks, it's very user friendly too. So I think with that versus always having to go into Google Drive and then keep searching, I just feel like everything is really at my fingertips, and everybody can get comments and things right away. And I know you can get that on the worksheets and things like that. But what I would say is download it and try it out, because there's just so much to it, and you can definitely see the key differences once you open up the app, and you can see all the different types of folders and tools that they have with it.
So what was it like before you got started with JT Capital, when they didn't have really this process or maybe system in place, or did they already have that in place and then you came in? Or what was that like?
At JT Capital?
Yeah.
So, I came in pretty much right away. And so the cool thing with that is we each kind of were able to take our experiences from different industries. So Sepin also has a background in management consulting and finance. And then Rohan, our third partner, he has he worked in the tech and venture capital world. So he brought this whole other insight to the company. And so with that, we already kind of had an idea of what our process and operations would look like. And so that's when we just started to outline all of the visions, goals for a company. How do we want processes, things like that to work? I led a lot of the marketing, and I had them join in too, because I think it's really important to have buy-in for what you want your company to be and where your vision is going. And then, he introduced some really cool platforms, and kind of actually, in fact, he developed the website. I was planning on outsourcing it. And that was a good point where he's like, well, I could just do this myself. And I said, okay, that's great. We used to use, a different CM, like a customer tool, and then the funnel. He's like, oh yeah, I have one that I really like, and I'll go ahead and do that. So that was kind of cool because, I don't have the experience in building a website, but I can put the content together and I know how to visualize that. So we worked really well hand in hand, kind of me providing the content, how things should look, that kind of stuff. And then he was able to kind of do the rest of it on the back end. So it was a lot of, things we were pulling from our different experiences. And I think what's really nice is because it's very dynamic and flexible, as we grow, if things don't work, we can always change it. And one of the things we said is we should really assess on almost like an every 2-month basis to see what is and isn't working. Because right now, since it's a little bit smaller, it's easier to do. What I hate doing is duct taping things together, because then it kind of gets out of control. And if you really want to grow, you want to do it the right way.
It sounds like, there's a lot of things that people could do right from before they start up and launch. Like, I'm sure that, there's probably a lot of people that it's like, okay, well, I need the website. I need the brochures. I need to get Notion. I need to organize all my folders, my files, and do all these things. But is that really what is important when you are going out and trying to acquire real estate, or is that something that you can add in later? Like, what's the good balance between like, hey, we're doing a bunch of things that's like definitely good for you, but is not getting you towards maybe the goal?
I think personally, it's important, and here's why, right? When you acquire your first property, investors want to see a website. So you have to have that in place. They're going to ask you, okay, like I had a call today with an investor and he's like, okay, well, what's your strategy for the company? You don't want to not have an answer, right? Especially when you're under deal. So what I would say is if you're thinking about launching a company, you have to think about your strategy, who your investors are, what are you going after? Because if you don't even know what you're going after, I don't really know how you're going to start acquiring. Now, you could even just take a couple of weeks and just really sit down and go through kind of like that checklist. And then obviously you're talking to brokers and things like that along the way, and you're going to get your first deal. But I think some of those things are really important. And if you don't do that, you're going to find yourself in a moment of silence when someone asks you, and you don't kind of want to be in that moment, right? You want to be very firm and comfortable with knowing everything about your company. Like what do you want to do in the first year? What do you want to do in 3 years? Because you're going to get asked from investors, like, where are you investing? Are you based in Texas only? Are you looking at other areas? What are your markets? So if you know that criteria from an acquisition point, you should also know that from a company's standpoint of where you see yourself going. So I absolutely think it's important.
So you've been in real estate now for about 3 years. What from your experience with consulting, project management, marketing, what do you see a lot of people in this space, maybe real estate companies doing that could really be improved by some maybe formalized from some different experience? So I guess what are the things that you're maybe seeing people lack on and maybe not do or neglect to do that you feel that is really important and really is helping you guys to grow and scale your company?
Yeah, I'd say like from a marketing operations standpoint, there's like a couple of things that I see, right? One is really being able to differentiate yourself, because one of the questions that I get asked from investors, like new investors that are coming, is, hey, I saw you. I also talked to XYZ. What makes you different? And so being able to truly convey that, because that's what they're looking for. You may not be the first person that they've talked to. So just really thinking about that can really set you apart. I think the other thing is just making sure as you're growing, not to stretch yourself too thin. And what I mean by that is really focusing on certain platforms. So if you think that a lot of your investors are on Facebook and they want to see your Facebook page and interact with you that way, then really focus on that and really knock that out of the ballpark. But if you try to go to doing too many different things, you're almost losing the quality. And I think it's not about quantity, it's really about quality and doing it well so that people come back to you and they're loyal to you. So I think finding those meaningful insights that investors say, oh, yeah, that was really interesting. And then the next time you say something, they're going to listen. So I think loyalty, because what happens is people are watching for a little bit before they're even potentially investing, right? They're looking around. And so that's where you want to be top of mind to them. And so if you're all over the place and you kind of offer okay content, that's probably they're just gonna be like, oh, okay, that's great. I'm going to move on to the next person. So find things that also, as you're looking at all of these other sponsors, what value can you add to the investor that no one else is adding?
And how can you do that? Like when like you said, this sponsor's talking to XYZ company. Can you give some examples of what you see a lot of people doing right now, and maybe why it's inefficient versus what you guys are doing, and how that's been able to support you?
Yeah, so one thing that's worked really well for us is we're actually doing a lot of monthly webinars with investors, and then posting them in groups. And so then our investor base has grown just by doing these monthly webinars, and we'll pick content that we know will be valuable to them. So 1 month it might be, hey, we're going to really focus on this market and we're going to tell you why we like it or why we don't like it. Another topic could be, hey, these are common questions we get during like the acquisition stage. We're going to answer them for you. And then we have a live forum so people can ask their questions and we'll directly answer them. And so sometimes we'll get 30 or 40 questions. That's great because it makes it very interactive and very enjoyable for them. And what we found is it's just worked very well. So each time we have our monthly webinar, we see more and more people coming and a lot of repeat people. And that's what you want, is you want people, they've spent an hour with you, and that's commitment. And so if you can get those people to keep coming back, that's a great thing. Now you have them intrigued because you're clearly adding value. An hour is a lot of time for a lot of people. The other thing is writing blogs, but making sure that they're meaningful, meaning adding your perspective to it and not just posting an article that you found, but adding your perspective and saying, why you think this is what they're saying is correct or incorrect or what have you. It just makes it seem that then you're like, okay, these people are really thoughtful. And this is what they're doing. So I think those are two things that can really separate yourselves, but then also get the investors that you're looking for.
How can you really attract those types of investors though? Because from myself, I've got two other podcasts aside from this one. I've got I'm in the short term rental niche, so it's very niche. But moving over to multifamily, like there's so much saturation in the market that even now, I don't even want to look at the stats on the podcast or when things are posted, just because there's so much content out there. So how do you, I know how I differentiate myself from all the other podcasts, but when you have podcasts out there or content where it's just every day they're content, and it's not maybe the best content, it's just content. It's content overload. How can you really make your content stand out from, when all these other, companies are trying to produce content to try to attract, investors, people that, are going to go into their customer database?
Yeah. So I think one, it's patience, right? Not every single, so for example, when you're doing write-ups, right? And blog write-ups. Not every single one is going to meet like a lot of people, right? You might just have maybe one or two viewers. But I think consistency is really key, and not giving up and continuing to do that, because then one article might just be that article that's shared a lot, right? So just look at it as your ROI on that. And then, and what mediums are you using, right? So maybe it's Twitter. Maybe you're finding people through there, and now you're writing or you're sharing and whatnot. And so I think reassessing and saying, hey, are these the right platforms for the type of things that I want to convey? So for example, for us, LinkedIn is really good because we can share more articles, right? And that's really like the platform where people are sharing those kinds of things and commenting. So I think part of it is also looking and yeah, like you said, you have to kind of cut through the clutter, but it's also patience. It's not going to happen overnight. These things take months, and then you can, use your Google Analytics to see, like, are people coming to your website? If they're not coming, then maybe you need to change something around. So I think you have to constantly assess and say what is and isn't working, and why.
What was it like when you were raising funds for that deal, that first deal or any of the subsequent deals? Were you implementing still that same KPIs and that whole project management background into trying to raise capital, or was it just like, hey, we're just gonna try to call as many people as we can and see who wants to work with us?
Yeah, so it was a little bit of both. They already had a pretty good investor database when I joined. So I think it was a little bit different. But then once that project was done, then there were so many things that we knew, okay, this is what we can do, and this is what we can do. And, after that, there was a lot of the stuff was in place for a couple of months now, right? So then we can track those things and we can see what isn't working. And then your network, and our goal for that year was really to increase our investor database, right? And we met that goal by the end of the year. And so a lot of it was just saying, okay, we want to be on X podcasts by the end of the year. We want to make sure that we have X newsletters going out the door. We want to make sure that we're on Facebook X number of times. And then we started to track that to see what worked, what didn't work. And we can track our newsletters. We could see how many people were opening them, and were they clicking on those links or not. And to be quite honest, some newsletters were better than others because some we just got way more feedback back on. And so it was tweaking along the way, but that's how you can understand your audience better.
And so you said you were trying to hit like even a certain amount of people in your database. Why? Like what? How do you equate the value of trying to like reach a certain number of like emails or a certain number of soft commitments for that?
Like why would it be important within the database?
Like how do you relate, like, okay, just because that they joined our email list, that this is a worthwhile KPI to be able to hit, as opposed to I guess kind of what's the significance behind like number of podcasts, number of emails? What's kind of your mindset behind that?
Okay, what was the reason behind that? Sure. So with podcasts, it was really just getting the brand name and the recognition stronger, right? Because when people hear you, they say, okay, that's really interesting. I want to talk to them. I want to learn more, right? So that was one avenue. Another avenue with newsletters, it was just the communication and the content. And, some people want to learn more about the industry and educate themselves. And that was part of our goal, was to educate our investors along the way so that they know about the markets and why we're looking at them. So that was something really important, to also just have a touch point. And we found many investors saying, we really liked your newsletters, and we purposefully kept them very short because we knew people didn't have as much time. And so that was the audience that we were reaching. And if they wanted to learn more, we had links in there every now and then so that they could dive in deeper if they wanted to. So those were some things that we did to just say, okay, this is why we wanted to do it. And then, we met our goal, and then we say, okay, what worked better versus, what didn't work as well and why. So one of them was Facebook, right? We just really did a lot of quotes and motivational quotes on Facebook. But after a while, people don't really care about that. So, so we're like, okay, that's where we had the presence, but it wasn't really as meaningful as maybe some of the other areas.
And where are you trying to send this content that is going to have the best result? Maybe people that are saying like, hey, I'm trying to get my name out there so people recognize me. How do you even identify where are those people with the target investor client that you're trying to reach?
Probably just start honestly networking with people in multifamily and seeing, where they're reaching people, right? And then you'll start to see, and I think part of it too is just start with your inner circle. And then once you really get to know your inner circle, and it's always good to start with like your first circle. And then you can start, and then what you'll see is word of mouth will start to spread and spread. And you kind of know your audience through just building those relationships where they're looking to be. So for example, for us, like Facebook was actually really good and just being engaged in a lot of the groups and providing value. So that worked. For JT Capital, what's worked really well for us is the power of hosting our own webinars and having, our inner network, and then seeing that slowly grow and grow. And actually, Twitter has worked really well as well because you're meeting people who have a like-minded vision, and just, starting to talk and having those conversations and growing that way. And they want to learn a little bit more about what you do. So it also just depends on what your company is striving to do, and then just start asking around to kind of see what other people are doing and then see what works for you. And go ahead and try it. You have nothing to lose. And if it doesn't work,
Did you measure the how much of modifying your messaging when you were raising capital when you came in versus when they were raising capital prior to you coming in? Did you measure the conversion or the return, and what were some of the things that you were doing to be able to see those results?
Yeah, so there's a lot of things that I think go into that. So for example, knowing when the right time is to actually send that initial email is very crucial, right? Do you do it on a Saturday night or a Sunday night or a Monday? And what time, right? Because you don't want to send it and then have people miss it or they get it a day later. And as we started to really grow, our commitments would come in so fast that we would be overcommitted within 3 days. So it was very quick. And that's part of just honing and figuring out the right times. And you can see who are the people that are, depending on what tools you use, you can see when they opened it, how many times they opened it, what links they've been clicking on, and getting that type of information. You can start to see who your own investor database or profile is. So for example, when I was at Hershey's, 6 a.m. was the best time to post. Who would have thought? For us, the best time to post or send out emails a lot of times was Sunday night when all of the activities are down, and people are kind of just going through some stuff, and it kind of like breaks through the clutter of the inbox on Monday mornings when you're getting advertisements from like 50 different companies. You might just get missed in the delete. So Sunday evenings worked really well for our investor profile. And that's when we saw like the initial commitments. And then you can start to get the texts and calls from investors saying, hey, what's this all about? So a lot of it, you start to you have to track and monitor that. And then part of it is streamlining your communications and knowing how many times to communicate. So we would be strategic with when we would send out our monthly newsletter versus when we would send out a follow-up email, because you also want to be mindful of not sending out too many things at once, because then your main message may get lost.
And if you had to go back and, get started, 3 years ago, what would you do differently if you had to start from scratch?
Well, I kind of was starting this new company a little bit from scratch. So this is one where I feel like right now it's, the slate was really clean. I think for me, I'm I'd like to be very buttoned up with the operations. And so before we even launched, we talked a lot about, okay, we talked about the vision, we talked about some of the processes, and we kind of aligned on it initially so that everybody was on board, and then everybody was given a task on what to do. And what I noticed is once you kind of have that clarity, things just happen so much more quickly. But it also happens not only quickly, but also you're doing it the right way. And so this time, like my goal is to make sure that we have our 1 year, 3 year, 5 year in place, and then have the right things in place so that it's just growing naturally, as opposed to then having this. So one thing that happened too is we switched systems, and moving things over from one system to another. That's a big implementation and a big task onto itself. Knowing that now, we started the system immediately. Even though we may only have like one project in that system, I know what it's like because I did that tedious task before. So those things just make sense.
And when you say system, are you talking about like an email CRM or?
Well, we switch a lot of things, but one would be like an investor platform.
Okay. And what do you think is the for people that are trying to button up before that they launch? Where do you even go? Like how do you even know like these are the things that we should answer, or this is what we should have before we even launch the business? Like where do you go for like some that type of framework?
Yeah, so I mean, you can always start with Google, right? And just look at, hey, launching a business. I'm sure if you Google launching a business 101, right? Or just some of the simple things, or what would be a good marketing plan? What should you include in the business plan, and getting yourself familiar with that kind of stuff. And then look, I think the nice part in real estate is there's a lot of entrepreneurs, and they all had to start at some point. They're all in different phases. So I would ask people who are maybe a step ahead of you, who just recently launched. I would look at people who've been in the industry for a couple of years, and then 7 years, and just get their take on things, because everybody will have some point of a pain point that they went through that you can learn from, and they'll say, hey, this is probably what I would have done differently. Now, not everything's going to work for you, but at least you'll have an idea. And one thing that I've learned is people are really willing to share and help other people grow. So I think just talk to your peers. That I think that will help you go really, really far. You can Google all you want, but I think, given that you're also in the real estate industry, talk to those people, because there's things like these investor platforms that won't apply to another industry, but those are those things that you want to make sure that your company is set up the right way.
And that's actually one of my favorite questions. And the last one here is, what question do you have for someone that's in a similar position than you, or maybe that next step that you're trying to go? What are some of what would you ask them?
That's a good question. I guess what I would ask them is, where do you see yourself 5 years from now? And what are the challenges that you think you're going to face? And what are you doing now to potentially avoid those challenges as you get bigger? Because where we are right now, I want to be able to know 5 years from now what else might see those challenges that we just may not be aware of. And I'd like to, it's kind of like having that crystal ball a little bit, but I'd like to have that set in place so we're ready for it.
And what are some of those challenges that you're facing right now?
So for us, I think it's, we're looking at a different investor profile. So we started to kind of regrow that and actually go in a little bit of a more institutional route, if you will. So we're looking at just different investors, and it's been really good so far. And I think, though, just having someone else who's had the experience of going down that path, what they did a little bit differently, how did they reach their audience? It'd be really great to know that. And I think that we're taking all the right steps, but it wouldn't hurt to get some guidance and advice along the way.
Awesome. And what's the best way someone can reach you, Puja, if they have any more questions or they want to be able to connect with you?
Sure. They can go to invest@jtcapitalgroup.com or www.jtcapitalgroup.com.
Awesome. And those webinars, if anybody did want to catch a webinar with you guys, how do they go about that?
If they can just email us, then we will send out the link if they are interested.
Awesome. Well, appreciate it. Thank you so much, Puja, for your time. And until next time, deal makers, talk to you later.
Thank you.
Hope you all enjoyed this episode. If you did, please go on over to iTunes and leave us a review, as that greatly supports the show. And if you'd like to be able to connect with John, the community, and I, then come and join us on our Facebook group, the Multifamily Success Network, where you can connect and make deals with other multifamily investors. Go to multifsuccess.com/community.